It's that time of the week again. We are live, Cowboys Medals live stream here at 𝙎𝙄𝙇𝙀𝙊𝙎. Welcome everybody into the live stream. Once again, it's a Tuesday. We're broadcasting from the great state of Texas, and we take no BS. Welcome everybody that is in. I see a lot of familiar faces in here. Ralph Potts is here. How you doing, buddy? Neil Hahn, Original Intent, is in. Dumb Money Media is here with a very special promotion for our conference tomorrow. Great little video he did, which I love. So we're going to go over that today. Thank you so much for doing that for us. Ed DeLorax is here. Fat Vegan is here. Neil Hahn, so many people. Thank you everybody for joining. We'll let people get into the chat before we jump into the topic. Today I wanted to cover real estate again, and I've harped on this a bit, but I'm going to come back to it. It's worse, ladies and gentlemen, than we thought. China is so much worse. A report that came out today that China has built 27 empty New York cities. No, I'm not joking. We're going to go over that report from the Epoch Times. We're going to also talk about the real estate market here in the US, which seems to be pulling back for a 4th straight month. So it looks like real estate is regressing in the 2 biggest economies in the world, albeit at different rates. We'll get into that detail here in a moment. Again, we're still letting people load into the live stream. Welcome everybody. This is Cowboys Medals Live. We broadcast again from the great state of Texas. As you can see here, we take absolutely no bullshit. We'll get into the real estate stuff here in a moment. We also have a very special announcement about tomorrow's conference. I think you guys will enjoy. And I have a special message for you, a warning, I think, for where and who to get your information from. I'll cover that at the end of this live stream. Of course, we're doing our Q&A like we do on every live stream. So you simply can put your question in the chat. And if you want, you can do a super chat, which will really grab my attention and make sure that we get your question answered, especially as we get busier. As we do a couple of minutes into this live stream, we've got a couple of hundred people going. As my assistant has posted in the chat, there's the link to our Medals 2022 kickoff, which is tomorrow, the 26th, from 1 to 6 p.m. Central Time. You simply follow that link. It is free registration for you, ladies and gentlemen. We'll have guest speakers and companies there you can talk to. We will have a roundtable with myself and some of my closest friends. I think you guys will enjoy that. And we will do, for about the last 45 minutes, a meet and greet where you guys can come on screen and ask me any question that you want, and I'll be happy to answer them, just so that we can be accessible to you, the people that make everything that we do possible, and as a note of appreciation. All right, let's get into it. We're long enough into this. Welcome everybody to today's live stream. Global real estate market chaos. China builds 27 empty New York cities. No, ladies and gentlemen, that is not a misprint. Let's get into it. We are going to do a share screen, and we're going to look at the Epoch Times story. This came up today at the Epoch Times by James Dale Davidson. Actually, I'm sorry, this is January 19th, a couple of days ago. As of 2016, China's empty apartment units could house New York City 27 times over. What does this mean to you? There are a lot of effects from wasting so many resources. As you delve into a thought exercise to get more acquainted with the ruinous consequences of credit bubbles, be grateful you really don't have to worry about malicious genies magically tagging you with mortgaged deeds. If you were invested in the Chinese property market, into Evergrande or Cynic or any of those other property developers, now may be the time for you to get the hell out. And I mean, if you're in your 401k and you're in global real estate, you may want to consider not being in that global real estate fund. If your broker has got any of this Chinese property development or housing stocks or funds anywhere in your portfolio, you may want to consider getting out. Now, I'm not your financial advisor, but when you build New York City 27 times over and it's fucking empty, that's a telltale sign of a real estate bubble. That is ridiculous. New York City is one of the largest cities in the world, and China's got 27 empty ones sitting there. What do you think that's going to do to their real estate market when people figure this out? Do you think the real estate valuations are going to hold steady? Do you think that $62 trillion real estate market that China has, the biggest single asset class in the world of any country, is going to be stable? Do you think when that thing crashes, it's not going to reverberate around the world for all of the international banks and funds that have invested in the Chinese and bought into this Chinese miracle? Or do you think it could be the black swan that crashes the global financial system? When we talk black swans, we talk major events. 27 empty New York cities in China. Is this bigger than Lehman? You damn well bet it's bigger than Lehman. And that, ladies and gentlemen, is the scale of what we're dealing about. So they go on to talk about in the article, but essentially, there's another point in the article I want to talk about. They talk about people digging into the Chinese real estate problem. And is it $36.4 trillion market as the Chinese report? Is it 45.9 or is it $116.6 trillion market? Okay. In previous episodes, we've quoted 62. This is almost double. But if you look at some of the digging that some analysts have done, you will realize, for example, Professor Christopher Balding of Peking University's HSBC Business School, an authority with good resources in the People's Bank of China Financial Stability Board, recently did some subversive arithmetic combining on-balance sheet assets with off-balance sheet assets. And he came up with total debt in China is a breathtaking 833% of GDP. That means a debt of 116.6 trillion. 8 times their freaking GDP is their total debt. And what is the property market part of that? At least 62 that we know of. That is insane. When this thing comes down, it's not going to stop. Okay. It's an absolute mess. So what are your comments? You guys put comments down there on what you think is going to happen when that Chinese real estate market, which is in a massive bubble and has 27 empty New York cities, finally collapses. Is it going to take down just $62 trillion of the property market in China? Is it going to take down 116 trillion of their entire debt market? Is it going to reverberate around the other trillions of dollars that banks hold around the world in different currencies? Dollars, euro dollars, euros, yuan, rubles, pounds, pesos. When does this stop? When this thing blows, when the hell does it stop? I'm not sure, ladies and gentlemen, that it ever does. I think this is a big issue and it's going to keep getting bigger. It's so big, I wanted to dedicate a whole show to it because I think it's that big. And if there is a Lehman moment sitting out there right now in the financial system, the global property market is. Now, I promised you I'd also tell you about the health of the US market. I did mention several weeks ago that the US market had regressed in terms of home prices for about 3 straight months. Now, that is a trend. 3 months starts a trend in most financial analysts' minds. But now we've got a 4th month. So let's talk about that real quick as we move to our next story. On Zero Hedge, US home prices decelerate for a 4th straight month. Now they haven't lost, we're talking deceleration. We're talking a slowing of growth. But you have to have a slowing of growth or a deceleration before you have a loss, right? It doesn't just go up and then immediately go negative. It starts to decelerate and at some point falls off. So we've topped, in other words, probably in the US home price market because we now have a 4-month trend that real estate prices are falling. From the article at Zero Hedge, for the 4th straight month, US home prices decelerated in the nation's 20 largest cities. The 20 city composite, which is an index, rose 18.29% year over year in November, below October's 18.46% pace, but it did print above the expected 18. But we were talking earlier about a 20% pace. So it's gone from 20 to 19 to 18, 4 months of deceleration. Now it's still growing. There's no reason to panic. It's still growing by 18%. I mean, Rob, it's growing by 18% year over year. What's the problem? Because you got a 4-month trend and you look at what's going on in China and they're ahead of us, I think, in their real estate collapse. But I think we're right there with them. Why? Because we have the same policies. Now, we may not be as overbuilt as they are, to be honest with you, but we're starting to see inventories peak up a little bit. We're starting to see prices stagnate a little bit. We're starting to see there's not enough people with money to buy at these prices. And so you've seen those increases start to come down. Now we're calling it very early in the US. It's still positive year over year for the last 4 straight months. We're calling it early, but in 2022, the real estate market around the world is going to come under a lot of stress. Probably going to start in China and in Europe. It will come to the US as well. Nevertheless, home price appreciation remains near record highs. Again, it's decelerating, but it's near record highs. Classic signs of a bubble. You hit a high, then you have 4 months, 3 months is a trend, 4 months deceleration. Does it continue to just gradually fall, or does it go right off the edge in a waterfall? We don't know. Nobody knows, but it's a sign that we have issues. Phoenix, Tampa, and Miami reported the highest year-over-year gains among the 20 cities in November, but Washington is seeing prices decelerate dramatically, rising just 11.11% year-over-year, below Minneapolis. Okay, and this, we haven't even stopped buying MBS yet. We haven't hiked rates, as the article points out. So it's decelerating before the Fed even does their monetary actions that they've been broadcasting and telegraphing for the last few months, where they start to pull the punch bowl away. Now, they haven't actually really pulled the punch bowl away, but the market's slowing before they actually do, which means if they actually enact those policies, it's going to get worse. If interest rates go up, especially on the 10-year, which affects the mortgage market, it's going to affect the ability of people to buy houses. The prices will have to come down. We talked about that. But the crash is already starting, at least in China, before the Fed does anything, and we're seeing a deceleration in the US before the Fed does anything. The Fed may just be throwing gasoline onto the fire. And not only in the US, remember, all global markets are connected. What the Fed does in the US affects the entire currency market across the world and the entire banking market. And of course, everything that's leveraged off of that, including every industry vertical, every industry, just about every company, because they all take debt, and especially the housing market and the stock markets, because why? They use debt to finance those and their operations. All right, guys, I don't see any super chats, but if you have one, please throw it down. I see Rolf Steiner is in, John Doe is in the chat, Al Mack is here, Dude Boy is here. Dumb Money Media is in the house, Kenny Barnes is here. We have lots of new faces. Thank you, everybody, for joining the chat. If you have questions, please post it in the chat or do a super chat and we will get to it. Again, to recap, the global real estate market continues its chaos. It wasn't just Evergrande, ladies and gentlemen, or Cynic. It's a lot deeper. Report out in the last few days that China has built 27 empty New York cities from the Epoch Times. And in the US, we still have real estate price growth, but it's decelerated now 4 months. That is now a consistent, persistent trend. We're starting to see that housing market start to experience stress. We've started to see the bond market in the US start to experience stress. The bond market in Europe has been in stress for years with negative interest rates, real interest rates and nominal. And now the stock market is still trading at all-time highs from PE ratio, but that's going to be another one that's going to start. When you start to see all of these industries, all these asset classes start to decelerate or reach negative, at various stages, that you're at the end of this bubble, this fiat era. So that's basically what's going down. It's not good, ladies and gentlemen. So looking forward to your questions. Let's see what you guys have so far in the chat. Has the Fed jacked up rates yet? No, not as of right now, Rolf. I saw an article today, 2 or 3 p.m. discussing how they haven't done it yet and debating whether or not they would do it in the next month. People are skeptical. Now, the Fed, when they said interest rate hikes, at first they said they would just jack it up from 0.08% to 0.9%. And then some Fed members said, well, maybe 3 rate hikes of 0.25, maybe 4, sometime in 2022. So they haven't really been consistent with how and when exactly they're going to do it. We just know that they're trying to condition the market that they're going to do it. But as far as I know, according to the financial media, I have not seen them actually raise rates. I haven't seen any announcements, but we'll stay on top of that. And yes, Rolf, we're all wobbly while the Fed is still praying QE gasoline. Yes. So the question is, can they actually pull back the punch bowl if we start to wobble? It depends on how much, because if you listen to what Powell said last year when he announced that they were going to taper and potentially raise interest rates, he said, but we can always stop doing these things if the markets experience problems. In other words, we know they're going to experience problems. So we know the Fed is never really going to jack up interest rates a lot or pull the punch bowl completely away in terms of buying the debt, because they've already said if it's negative effects, we'll stop. Well, of course it's going to be negative effects. The markets are already starting to roll before we even get there. So that's basically his out for not really ever stopping QE and not really ever raising interest rates a lot. He may raise them a little bit, but he gave himself an out back in December, if you guys looked at his comments. So, Yeah, they're going to try this year. Yeah, it's going to affect markets. Yeah, they're probably going to pull back. That's going to be the story. How much, we don't know. It depends on what they do. And it depends on how much these markets regress. In the meantime, Fat Vegan says, gold, silver, pros, fractional silver to have multiple purchases or 1 ounce rounds. In your opinion today, what are you stacking? You know, it's interesting that you mentioned that. I have here on my desk a 1 ounce silver eagle. Now, these are running fairly high premiums, but that's because they're in somewhat limited supply. We do have a silver shortage and it's hard to get them. It's not just the mints cutting off production. There is a general lack of available silver in the market, and it's being pushed over away from the minted coins. And even in jewelry, it's being pushed over to industry, because if we really stopped having silver available for industry, it would affect the global markets. You talk about not being able to build stuff because you don't have silver, and silver is used in a lot of stuff, almost everything. So I think that right now they're trying to cover up the silver shortage issues by pushing the available silver over to, and that's what's making these go up. Rounds are going up, even junk silver is going up. You know, the government printed coins pre-1965, the Eagles are up. But I stack, you know, a lot of this. I don't keep a lot at the house. Obviously, I have it in a private vault. I've said this many times, but I do keep a couple of coins around just to show them. I like the Eagles. I love the maple leafs, are absolutely gorgeous. I love the rounds. I got the 1,000 ounce bar, you know, I got from Korea's Inc. off of the Dakota Depository. It's in safekeeping as well. I don't keep that around the house. It weighs like 80 pounds. But yeah, I mean, I stack different types of silver. I like them all. I don't really have a strict preference, but hopefully that answers your question, Fat. Would I go to fractional silver? Maybe. The fractional silver is a bit harder to get than fractional gold even, I think. But yeah, I mean, you could do some fractional silver if you want. I would say you do the junk silver, because you get the dimes and you get the Kennedy halves or the quarters or whatever. And it is kind of fractional. It's a fractional ounce if you want. And as long as you know how much silver is in each one, you can quickly say how much it's worth. There are calculators online for you there. So a couple of different ways. Show them the deals. All right, so we'll show you a couple of deals. On our website, we have an agreement with some guys to bring you some pretty good deals. So I'll go ahead and show that. Now is a good time, since Fat Vegan asked the question about what I stock. We'll talk about how you guys can get some pretty good deals, especially on silver, but on a lot of stuff. So if you go to the website here, goldsilverpros.com, you click on the little button here that says precious metals deals, and we have some deals. So Miles Franklin has a lot of deals. You can click there, contact them. They have gold and silver. ARC Silver, my good friend that's coming to the conference tomorrow, Ian, is going to talk about that. He has a deal on 40% candy halves at only $1.39 premium per ounce over spot. I don't think you're getting that anywhere else on the freaking planet. Okay, but he has other deals. So if we click on see the deals there, this is his entire roster of what you can get through Gold Silver Pros. Now, a lot of this is exclusive to Gold Silver Pros. You may not be able to get it if you contact them directly. They still have the 1,000 ounce COMEX bar that I got, 99 cents over spot. They have kilogram bars at $2.79 over spot. I've never seen anybody come close to that. They've got a bunch of other stuff. They've also got some gold there. So they got African Krugerrands. These are silver, but they have some gold as well. So if you go through here, you fill out this form, they'll contact you and give you all the deals they have. Some of the cheapest silver on the planet. I'm not joking. Then we have a deal with American Gold Exchange. If you want the Eagles like I have, they have them, you know, as low as $7.99 over spot, depending on how many you buy. So they start at $8.99 over spot. If you order more, $7.99. Again, fairly good premiums on those Eagles, but at least they have them, and you can get them very competitively here on our website just by going to the website. Since we're talking about stuff that we're doing, I want to last time introduce the 2022 Metals Kickoff Conference. It is virtual. It is tomorrow, 1 to 6 p.m. Central Time. You simply click here to register the event, and that takes you to Hopin, where you can get on Hopin and you can register for that. If you want to look at the schedule, tomorrow at 1 p.m., we have James Anderson from SD Bullion talking about knowing when to sell your precious metals. We have two companies after that, Tier 1 Silver and Reina Silver. And then after that, we have Tavi Costa from Crescat Capital talking about risk in the equity markets and the inflationary macro environment. I'm really looking forward to Tavi's talk. Super, super smart guy. Ian Everard and I will be in an interview talking about geopolitical factors facing gold and silver. That's tomorrow at 2:50. Then we have two more company presentation by Sele. Then we have John Fennick on talking about equity markets, mining, and energy sectors. Then we have Contango and Silver Hammer giving you their stories if you're interested in those equities. Then we have a very special roundtable tomorrow at 4:40 Central Time with Dave Kranzler, Andy Shakeman, and Chris Marcus, three of the channel favorites. I put that together specifically for you guys because I know you guys love these guys. They get some of the best views on the channel. They're some of my best friends in the business, and I want to bring them on and have a good talk. And then there's a meet and greet at 5:10 to 6 p.m. tomorrow Central Time, where you can come and meet me and ask any question you want. And I'll be on the call and we can talk about anything you guys want to talk about. And of course, bring your questions, your stories, and a drink of your choice. I'll probably have my favorite Michelob Ultra Light beer there because I'm on a diet, but feel free to bring your drinks as well. Let me back to the chat and see if you guys have asked any questions about the event we have tomorrow or asked about the mess that is the Chinese real estate market. Let's see. A comment here from EC660 says, as the housing slows down in the areas that people are trying to leave, it will slow faster in the areas they're trying to move to. Because just like in 07, 08, Florida and other areas are overbuilt. I agree with you. On the East and West Coast got really slammed in 07 and 08. Massive issues as people were leaving those, coming to, say, Texas, Oklahoma, Nevada, Idaho, some of these other states that were more affordable, a little bit more freedom oriented as well, a little bit less socialist. All American beer is ultra light. You can drink whatever you want. Haha. Thank you, Fontana Ranja, for that. Ralph says, watch for the bond vigilantes. I agree 100%. I think the bond vigilantes are going to come out in force as pressures come on interest rates to rise and as the bond market starts to suffer problems. I 100% agree with you. Dude Boy says, I like the Texas Mint rounds. Maybe we'll be using them as Texas currency one day. You know, I would love it. I live in Texas. Love that we have our own depository. You would love to use the rounds 100%. 100% on that. I'm with you. I'm not seeing any question. Oh, I see one from Dumb Money Media. If the Fed U-turns, will they send more stimmies to calm the masses? 100% yes. Easy answer. Yes, yes, yes. And hell yes. Good question. Easy answer. You guys got to give me a tough one. No tough questions in here. Oh, I got one from Lynn William. After China, where do you see property issues next? I think in Europe, just because of the negative interest rates, and I think that people, if you look at negative real interest rates in the bond market, people aren't getting valuations, and so they're going stocks and real estate and building and bidding those up. So those are in more massive bubbles because you're not getting the value in the bond space. And so I think people will flee to other things. It builds them up. But if you look at the issues with Europe, you have the North and the South. You have two completely different economies. You have them smushed together through the European Trade Union and the Euro. It's a complete mess. It's going to break. And the economic problems that led to them having negative interest rates in their bonds to support their currency and trade system is going to come home to roost. I said probably 10 to 12 years ago, when I first started writing for Seeking Alpha and getting syndicated, I said I thought it would start in Europe first. I could be wrong. It could be China, but I still think China is stronger from the standpoint of their currency. The yuan is still stronger than the euro, in my opinion, even though it's not great, still stronger. And I think even though China has massive debt problems and property market problems, they have a lot of gold. They have a lot of industry. And I think the government is going to, with their state-owned entities and other things, is going to have some resiliency to the next downturn. They're not going to be spared from it. So I'm still guessing Europe is going to be the first and the worst. But at this point, with everything across the world, I don't know. It's hard to call. I still think it's Europe, but it could be parts of Asia. Hell, it could be the US. I mean, I think things are worse in the US than the mainstream media, lets on, to be honest with you. So good question, Lynn Wim. I appreciate that question very much. Before we take more questions and before we keep going, I got to show you the promotional video for tomorrow's conference by Dumb Money Media. This is a lot of fun, guys. A whole a lot of fun. I think this is the best yet. It's great music. It's got me dancing, which is scary, I admit. But you guys have to see it. So make sure we got the sound on. Here we go. This is on Dumb Money Media channel here on YouTube. You can simply look it up by going to Dumb Money Media on YouTube. He's got lots and lots and lots of meme videos out there. Does a great job for all of us. We appreciate him because he really supports us. He supports myself and Chris Marcus and lots of other people and does great work. I mean, I don't have anybody on my team, I think, that could do stuff like this. It's really cool. So here we go. It's tomorrow. One last night to register and we get started sharp. 1 p.m. tomorrow. Look forward to seeing everybody there. I have it on Good Authority. Dumb Money Media will be there. So you can ask him questions about his channel, his video in the chat when you get there. Of course, go visit, like, subscribe, and share his videos. Thank you so much for your support. We appreciate you very much. Lots of fun. And enjoy the videos he does. Very creative. Thank you so much for doing that. All right. I think we have gotten to the gist of the program. Massive problems in the property markets. You want them, we got them for you. Chaos in China with 27 empty New York cities, essentially. Oh, who has the best moves? I don't know. Who has the best moves, ladies and gentlemen? Who do you think? Good question. Andy is Groot. That's right. Yeah, problems in the real estate market around the world. Good questions today from Lynn and Rolf and everybody about what's going on. I still think it's going to start in Europe, could be anywhere. Why don't you guys come to the conference? We're going to talk about that. We're going to have the big macro conversation. We're going to have that conversation with Fennec and Tavi Costa and Ina Everard and all the group there about what's going on. You guys can talk to us. We'll have a session at the end where you can come on screen if you want and talk to us and ask questions. It's going to be a lot of fun. We always love to do these because it allows us to connect with you guys. However, we're not going to be posting all these conference videos to YouTube anymore. You got to come to get them, guys. So if you want to see the speakers, if you want to see the information that we have, you want to talk to me, you got to come to the conference. We'll just be doing maybe a brief 5-minute recap of that on the channel afterwards, but we're not going to be posting all that stuff because we want you guys to come to the conference, interact with us and with everyone else. It's a community. It's fun. All right, now I did promise you I was going to address something that's happened recently. It caused me some concern with the community. And the community, I mean the YouTube social media community. So recently I was involved with some events and things from some people in which I thought it was going to be really great and put my name to it, did a lot of work on it. And coming out of that, I think I learned some things about some people that I thought I could trust. And this is really a lesson in trust more than anything. When you find out more about people's motivations, sometimes it really alerts you to the fact that not everybody's in this for anybody but themselves. There are some people that I've run into in this space that I think are in it only for themselves, but they've got a lot of people fooled. And so I think you just have to be careful. So my general statement is always fact check all of us here on YouTube. Sometimes we're wrong, sometimes we make mistakes, but I think there are people out there that aren't telling you the truth. And their motivations to me are something other than pure, other than we're doing this as a community. Please always do your own research. Just because somebody's popular on YouTube does not mean that they're right or that they have your best interest in mind. We do this for the people. It's a we the people, right? I'm just one of you guys. I'm no better than any of you. I just try to do a lot of research and help you guys out. And, I appreciate all the support you give me. And I will always try to 100% be honest with you. I will never, ever try to pull the wool over your eyes or do anything I think that's not in your best interest, honestly. But there are tons of people out there on YouTube, I think I found out, that are. And so I won't be associating with these people anymore. I'm not interested in working with people that don't have your interest in mind and are only concerned about themselves. And I don't like it, when people do things that are, not honest. So you will see some people not return to my channel. You will see me not return to some other people's channels. I'm not going to mention names, but I think you guys could probably figure it out. But just know, and I mean this, I do everything for you guys. And when I run into people who I don't think have your best interest at heart or the community's best interest at heart, I won't associate with them anymore. And that's all really I'm going to say on that. But just please, please, please be careful who you follow, who you listen to, and please always, always check everything, do your own research, and protect yourself. Because at the end of the day, when all this stuff comes down, all the preparation we've done is going to matter. And if you're in the wrong spot because you listen to the wrong person or the wrong advice, it could definitely be detrimental to you. We will always try to provide the best advice we can, well, in the best community we can. That's why I do it. All right, guys, I'm going to go ahead and wrap this up. Thank you guys so much for joining us here on the live stream today. I love doing these live streams. Absolute favorite thing for me to do. I get to interact with you guys, which is why I do it. You guys are really, really why I do it. And if I didn't have the audience, I wouldn't be here, obviously. So appreciate it very much. Remember, guys, tomorrow we have that special event. It's free to you guys to sign up. We're going to have lots of speakers, some companies there. If you're interested in the investment side, come join us, have fun. I'll be there as well. And at the very end, the last 45, 50 minutes, you'll be able to come on screen and talk to me interactively as much as you want. And we'll have a good time. And to that session, bring your favorite drink of choice and bring the fun, guys. It's going to be a lot of fun. This is here for you and for us to get educated, but to have a whole hell of a lot of fun. All right, this has been Rob Kientz, goldsilverpros.com. This is your Tuesday Cowboy Metals live stream. Once again, we broadcast from the great state of Texas, and we take no bullshit, and that includes from other YouTube influencers. Thank you, everyone. Have a good night.